loss in the ratio of 1:1. That means equal proportion they are sharing their profit. From the following travelers and additional informations, prepare trading and profit and loss account for the year ended 31st March 2019. And the balance sheet as on that date. That means here question is given a travelers and certain adjustments are also there. Below the travelers there are certain adjustments. There are 6 adjustments which is given in the question. And this travelers is given. Out of that you have to prepare trading account, profit and loss account and balance sheet as on the date of 31st March 2019. So let us discuss how to solve this problem. We will discuss it. So first is stock. In the debit balance item is given stock on 1st April 2018. That you have to take into the trading account because opening stock is taken in trading account debit side. Then bills receivable, it will be taken in the balance sheet in the asset side. Wages and salary. Here wages and salary means we have to give priority to the wages, so it is taken into the trading account. Then sundry debtor, it is taken in the balance sheet asset side. Bad debt is a loss. It is taken in the PL account debit side. Then purchase account it is taken in the trading account debit side. If any return is given, also there is a purchase return that should be deducted. Purchase return is given in credit side. Purchase return is 4,000, which we have to deduct from the purchase 1,48,000 to we have to deduct 4,000. That we have to show. Then motor car, machinery, audit fees, sales return, discount, building, cash at bank, all the debit balance item we have to take, which is given in the questions in the debit side and in asset side. And the credit balance item, general reserve, capital of the and CASMA and creditor, reserve of doubtful debt, old reserve of doubtful debt 1800. That is the credit balance item which you have to adjust at the time at asset side from debtor. And sales amount is given, sales return is also there in the debit side, and outstanding wages, purchase return, discount, all the credit balance item are also there. Okay, this is the question and certain adjustments are there. First adjustment is closing stock of rupees 40,000. Then depreciation is given on building 5% and machinery 3%. So then bills receivable including disallowed bill of 3,000. That means there is an adjustment related to bills receivable. So we have to point out the bills receivable as adjustment. Then goods worth 1,000 taken by the Daya for personal use was not entered in the books of accounts. That means then 1,000 was taken by Daya for personal use, which is not entered in the books. So we have to record it twice. That means every student have to remember one thing while they have to prepare a final account with adjustments like this. Travelers is given and certain adjustments are given. Then you have to know that the item which is given in the adjustment, we have to treat it, give the treatment for particular transaction which is given in adjustment, additional information 2 times. You have to give that adjustment entry for 2 times. 2 times means we have to take that item in trading account or profit and loss account and balance sheet. That means every transaction have dual aspect concept. So both the transactions are recorded twice if it is not recorded earlier. So adjustment means it is not recorded, it is identified at the end of the day while preparing financial statements. So we have to treat it twice. So goods worth 1,000 taken by the for personal use was not entered into the books of accounts. Then the next one is the write off 1,800 of bad debt and reserve doubtful debt is 5% on sundry debtor. That is an adjustment we have to take with debtor. And goods of 6,000 were sold but not entered was made in the books of accounts. So we will start the problem now. So let us start. So we have to prepare the format like this. The format is like this. So here left hand side is the debit side and right hand side is the credit side. We have to take one item and put it into the parallel account. First item is opening stock. So opening stock we have to take it to the debit side of trading account. 2 opening stock. 2 opening stock. 2 opening stock account, and opening stock amount is 2 opening stock. 2 opening stock is 65,000. So take it 65,000. Then next item is 2 purchases. Purchases. Here purchase is given 1,48,000. Inner column we have to take it in the inner column. Purchase 1,48,000 and less purchase return. There is also a purchase return. Purchase return. Returns is how much? Return is purchase is debit balance and purchase return. You can find the purchase return in credit column. Okay. When we are purchasing goods, it comes in, that is expenses, so it is debit side, and purchase return means after purchasing we are deducting that there is some default in our goods or purchase item, then we have to go for the return, and that is deducted from the purchase amount. So 4,000 is the purchase return, and in outer column we have to take, in outer column is equal to 1,48,000 minus 4,000, that is the net is 1,44,000. 1,44,000. Then the next item is, we have to read it one by one and put it. Then next item is bills receivable. Stock is taken 65,000. Then next is bills receivable. So bills receivable is an asset side item. So we have to go to the asset side and take an as bills receivable. So bills receivable. Bills receivable. Bills receivable amount is so bills receivable total amount is 28,000. And there is an adjustment related to bills receivable. Goods 6 number adjustment is that goods of 6,000. Look at the question, which is we have already shown in your earlier before solving, and you also go to the textbook of this and see that, or take the pause and go to the back of this video and take the screenshot of that question if you don't have the book. So 6 number adjustment is goods of 6,000 were sold but no entry was made in the books of the accounts. That means 6,000 of the goods were sold, already sold out. That means 6,000 goods are sold but no entry has been made. No entry has been made. And it is the goods item, but it is not related to bills receivable. 3 number adjustment number 3. Bills receivable includes a dishonored bill of 3,000. Bills receivable included dishonored bill. That means one bill which is included in bills receivable of 28,000 of 3,000 amount which is dishonored by the bank. Okay. So bills receivable include dishonored bill. So less dishonored bill, less dishonored bill, dishonored bill of rupees 3,000. Dishonored bill of rupees 3,000. So we take outer column as 28,000 minus 3,000. The answer is 25,000. So this is the second item, adjustment is done. But similar, in the same time, we have to also treat it when the bill receivable includes some amount and that is not collected due to dishonored of the bill. That means that amount which is excluded from bills receivable, immediately that you have to add it with your sundry debtor, because we have to receive that amount later on. So bills receivable when dishonored, it is transferred to the sundry debtor account. That means it is deducted from the bills receivable, and similarly in the same time you have to add into the sundry debtor. So let us take the sundry debtor. If you don't take it, then you will forget maybe sundry debtor, and find out the sundry debtor amount from the trial balance. Sundry debtor is the fourth item. So 1,32,000 is the sundry debtor. 1,32,500, and you have to add that item. Add amount is your bills receivable dishonored. Same amount you have to take here as sundry debtor and add it. Bills, that is 3,000. Then the total figure will be, this 1,32,500 plus 1,35,000. 500 is the total amount. Then we have to add some unrecorded sales also there. Goods of rupees 6,000 are sold but not recorded in the books amount. That amount we have to add it. What is why you have got? Because it's unrecorded sales. We have sold it, but we not get the money from that person. That means we have to receive that amount. So we have to add that unrecorded sales. Unrecorded, because we have to receive that amount later on unrecorded sales. So that amount is your 6,000. And by adding this item, the total debt now we have to receive from the debtor 1,35,500 plus 6,000. 1,41,500 is the total debt which we have to receive. And we have to also insert some column because we need some more space. Okay. So now we have to charge the adjustment number 3 is over. Then the 6 is also over, and we have to go to adjustment number 4. Goods sold rupees 1,000 taken by Daya for personal use. Goods was taken for. So the next is 5 number. Write up that number 4 we will do it later on because it is the drawing amount. So drawing treatment is not here. So we have to take the write up 1,800 as bad debt. So after getting the full amount of debtor, we have to deduct the bad debt, less bad debt, or we can say that the further bad debt of 1,800. 1,800. Then the net figure will be after deduction of 1,800. The figure will be 1,41,500 minus the 1,800. The figure is 1,39,700. Then we have to also in the same line adjustment number 5. We have to deduct bad debt and maintain the reserve doubtful debt as a 5% on certain debtor. That means we have to also deduct another one thing, reserve for doubtful debt, which is also known as provision for doubtful debt. Reserve for doubtful debt. Doubtful debt at the rate of 5%. At the rate of 5%. So how we have to calculate the 5%? We have to take on the same amount 1,39,700 into 5%. That means this amount into 5%, and the amount is 6,985. 6,985 that we have to deduct from the amount 1,39,700 and the amount we have to transfer the outer amount. So this is the net amount 1,39,700 minus this. That means your 6,985, the outer column amount will be 1,32,750. So this adjustment of balance sheet related to sundry debtor is over. And the same thing which we have to deduct it from here, we have to take it in the PL account debit side as a adjustment. So first we have to take two bad debt, which bad debt is already given in the trial balance, within the trial balance. First we have to take that bad debt. That amount, bad debts amount which is given on the within the trial balance, that is 1,000. We take it in the inner column. Then you have to add the new bad debt which is deducted now. New bad debt for further bad debt, further bad debt which is 1,800. That you have to add. Then you have to add another one thing, the new provision for doubtful debt, or so reserve in doubtful debt. In bracket you have to write new, that amount, and that amount we have to take from, which is taken here, new bad debt 6,985, 6,985 is the amount. Then we have to add these three items and get the total amount. This plus 1,800, 1,000 plus 1,800 plus the new provision or new reserve. Then we have to check that whether there is a old reserve for doubtful debt is available in the question. That means within balance or not. RDD, reserve for doubtful debt. In bracket you have to write down old. Old means it is given, if it is given in the question in the trial balance credit side, then we have to take. So let us check whether given or not. Yes, there is a 1800 reserve for doubtful debt. That we have to deduct here as a 1800, and we take the final figure as a outer column. So 9785 minus 1800, the net amount is the 7985, which you have to take in the 7985 is the adjustment figure which you have to get the output. Then now opening stock is given, already taken, bills receivable taken, wages and salary, that you have to take in the debit side of trading account. Two wages, and salary. Two wages and salary. Two wages and salary amount is 9,000. It is the expenditure which you have to take in the debit side. All expenses are taken in the debit side on which. Sundry debtor already treated, bad debt already treated, purchased already taken. Then motor car. So motor car is the asset which you have to take into the balance sheet asset side. Motor car. There is no adjustment. Motor car. Motor car amount is motor car amount is 68,000, which you have to get out of the column directly. 68,000 because there is no depreciation. Then machinery. Machinery also have depreciation. Machinery amount is 1,14,800, and you have to treat less depreciation. Less depreciation. Depreciation at the rate of how much? Machinery depreciation is 3%, at the rate of 3%. So 3% on this amount. This into 3%. Explaining slowly, very minutely, one by one. So you will give focus in the question. Definitely you will clear this problem in one chance. So see the minutely what I am doing here and observe what I am doing. The total machinery amount is 1,14,800 and depreciation is at the rate of 3% on that amount. So that means book value, whatever the book value is given, on that amount we have to take the depreciation at the 3%. Depreciation means when we are using one asset, fixed asset, its value is decreased. The decreased part of value is known as depreciation. Here decreased part of value in a year is 3%, which is given in the adjustment. That we have deducted. And the outer column amount is 1,11,356. This is the balance sheet figure which you have to take. 1,11,356. Then the next item is machinery audit fees. Audit fees is a revenue expenditure which you have to take in the PL account deficit. Two audit expenses. Two audit expenses amount is how much? Amount is 1,200. And the next item is sales return. Sales returns means first we have to take the sales, then we have to deduct the sales return. But there is a unrecorded sales of some amount which we have to take and already added in the sundry debtor in balance sheet. Unrecorded sales. That means that unrecorded sales is not taken. That means we have to take it. Where we have to take? We have to take with the sales because it is the adjustment item. We have to treat it twice. First one thing is added in sundry debtor, and the same thing we have to add in the sales here. So first we have to write as buy sales, which is given in the question. Buy sales is given within the trial balance is 2,85,000. 2,85,500 I think. 2,85,500 the sales is given. Then you have to add that amount, add unrecorded sales. Unrecorded sales. And that unrecorded sales amount is your 6,000. Your unrecorded amount of sales is 6,000. And now you find out the total sale, 2,85,000 plus 6,000. The total amount will be 2,91,000 is the total sales. Out of that, you have to deduct the sales return. So less sales return. Sales return and amount is which is given in the debit side or debit balance, that is 2,000. And the outer column you have to put 2,91,500 minus sales return, and the final figure is 2,89,500. It is the net sell which you have to take in the outer column. Then in the trading side, you have to take the buy closing stock. Closing stock, which is given in the outside the trial balance, closing stock. It is also given in the outside of the trial balance, so it is also taken twice. Closing stock account, and the amount of closing stock account is given in the adjustment number 1, closing stock 40,000. So you have to take it twice. One is in the credit side of trading account, and the same item you have to that 40,000 same item you have to take in the closing stock at balance sheet. Here you have to take closing stock, that is amount is your 40,000. This is the adjustment related to closing stock. And one more thing, goods taken by the for personal use, goods taken by for personal use, that is having two treatment. You can, when goods is taken by anybody, that may be owner, that may be any person, or we are disbursing as a sample, or we are giving any goods to anybody, that we have two treatment. Twice, in two way we can represent it. That may be deducted from the purchase in the trading account debit side. Here you can purchase deduct it. Otherwise you can put it in the credit side. So effect is same effect. So it is given out of the purchase. So we have to deduct it in the credit side because the effect is same. If you are given deducted from the credit side, then it is okay also. So I have created the space. So first we have to audit this total amount 1,48,000, then minus 4,000 you get net figure 1,44,000. Here we have to delete it. Then less goods taken by the which is given in the adjustment, and the figure is goods of 1,000 was taken by the for personal use. So that 1,000 you have to deduct here and take the final figure in the outer column, that is 1,44,000 minus 1,000. Again I am repeating the same thing. Goods taken by the is a personal expenses. It is not a business expenses, and they have taken out of the business that goods so that it is deducted from the purchase. Because it is not used for the business purpose, it is taken by the owner, the one partner for their personal purpose. So it have two treatment. It can be deducted from the purchase side, and it can be simply you can take it the goods taken by the for personal use in the credit side, also same treatment. So there is no impact or no effect also. And this is one thing, 1,000 you have to deduct from the purchase, and that same item also you have to deduct from the capital in the balance sheet. Here you have to take the total capital. Capital is given in the question. You have to search capital is must be in the credit side there. Capital is 1,60,000. 1,60,000 is the capital, and capital of, because it is two partner, you have to take separately from both the partners' capital. So Daya's capital is how much? Daya's capital is 1,60,000. So you have to take 1,60,000 as Daya's capital. Then less goods taken by less goods taken by the, that is personal use. So I'm shortly writing P use. And the amount is the personal use is 1,000 that you have to deduct, and then you have to add the net profit or whatever you will get. So this is the amount, capital minus 1,000 amount. Then you have to add if there is net profit or net loss, you have to deduct net profit. It is not calculated. When you get the net profit, that you have to add. Just I have written here. Then our next treatment is audit fees is given, sales return is given, sales return is also taken. Then discount. Discount debit balance is the PL account item. So we have to take in the PL account to discount because it is the expenditure to this to discount. To discount is your 2,300 amount. So directly take it in the outer column. 2,300 is given in the trial balance. And discount received, another discount received which is given in the credit side. Discount received simultaneously also you have to put the same item by discount received. Discount received and amount is given 1,800. And purchase return is already declared. Outstanding wages that you have to take the liability if it is given within the trial balance. So outstanding liabilities we have to take it in the balance, in the liability side of the balance sheet. Then the building amount is 75,000. Building is the asset that you have to take. I am reading one by one and putting in the right place one by one. So this is the procedure of making parallel account. Then building is a fixed asset. So we have to take in the asset side of balance sheet. Building total amount which is given within the trial balance is 75,000. Then we have to deduct the less depreciation. And depreciation amount on building is 5%. Depreciation on building is 5%. So we have to take the depreciation on 75,000 as a 5%. So equal to 75,000 into 5%. So 3,750 is the depreciation which we have taken. Building 3,750 is depreciation is taken, and we have to take the balance figure, net figure in the outer column. So 75,000 minus the figure is 3,750. So we get 71,250 is the building. And the depreciation which is deducted, both the depreciation from building and your from machinery, these are the non-cash expenditure, and it is deducted from the machinery or building, furniture, whatever the fixed asset you are using in our business. If depreciation is deducted from that amount, it is charged to PL account debit side because it is a non-cash expenditure. Why it is called non-cash? Because when we purchase that machinery, the entire amount of machinery we have paid. So when we are using that value is used. So it is a expenditure for us. That means when we are using some asset, the value of that asset slowly decreases. Why it is decreasing? There are many causes due to loss of time, due to use, due to accident, due to wear and tear, and due to obsolescence. Obsolescence means when technology changes, upgraded machines and assets are come to the market, then the previous asset we are also available with the business, the value of that asset will decrease. And that decreased part value is called depreciation, which is a revenue expenditure. We have to charge the depreciation every year on your assets. So we have to take two depreciation here, two depreciation, depreciation amount, two depreciation amount, and we have to take the both the depreciation. That is on one thing is on building, one is building, and another is depreciation on machinery. Depreciation on building and another is depreciation on machinery. One depreciation is depreciation on building, one is another is depreciation on machinery. Depreciation on machinery. And building depreciation is 373750, and machinery depreciation is to link that cell better than, yes, 3444. Then the total depreciation amount we get, how much that you have to take in the outer column, that is 3750 plus the machinery depreciation. So 7194 is the total depreciation which you have to take in the debit side of profit and loss account. 7194 is the total depreciation. Then next is cash at bank, 10% investment. Cash at bank is the balance sheet asset side item, so we have to take it in the balance sheet, cash at bank. So take here cash at bank. Cash at bank amount is your 12,000, and another is 10% investment is 10% investment that you have to do in the non-current item, so you have to take in the place of asset side 10% investment. Why 10%? What is attached in the prefix? 10% means the investment which is we have done in this financial year or whatever the time we get in return as interest the 10% on fixed basis. So when we have invested that amount, there is also decided by the where I'm investing. They are also declared as to give us the 10% interest. That's why it is named as 10% investment, and that value is 20,000. 20,000 is the investment amount. 20,000 is the investment amount which you have to take in the balance sheet. Investment or 10% investment amount that is, and we have to check this 10% investment amount is 20,000. That means whether they have given the interest amount in that financial year. Date of investment is not given. That means we assume that it is invested during the year that or the beginning of the year. So 20,000 and the investment amount in interest is 10%. We have to check the annual basis. That is 20,000 into interest rate is 10%. That means 2,000 is the interest which is due but not received. It is not given anywhere, so we have to take as a accrued interest. That means we invested the money, then we have the rights to take the interest at the end of the financial year. So we have to put here as a accrued interest. Accrued interest. What is the meaning of accrued interest? In accrued interest is due but not received, so it is receivable in the future. Accrued interest. That amount is 2,000. You have to take in the current asset. So this is the treatment of investment, and the investment which is taken as accrued interest is a revenue income that you also have to take in the credit side of PL account by accrued interest. By accrued interest, if there is an interest received is given, then we also added it. No, there is no interest received is given in the travelers. So accrued interest we have to take in the outer column, that is 2,000. And the next item is advertisement. Advertisement paid for 9 months. That means within the travelers one advertisement is given 4,500 that you have to take in the PL account. You also need more space. Okay. So insert. Now we are inserting. Then we have to write down the two advertisements. Advertisement expenses, and the figure is advertisement expenses is already given 4,900 4,500, which is for the 9 months. This is the 9 months. That means there is outstanding of 3 months. So add. It is the normal thing. Question is given in the travelers advertisement expenses paid for 9 months is 4,500. This is the 9 month because 1 year is 12 months. If 9 month advertisement expenses is given, that means there are it says that there is a outstanding of another 3 months that you have to take. So what outstanding advertisement expenses is how much that you have to calculate. So outstanding advertisement expenses, and the value, how we calculate the value, will calculate like this. 4,500 is for how many months? 9 months. So divided by 9 months into 3 months. The figure is 1,500. The total advertising expenses in that particular financial year is 4,500 plus 1,500 is equal to 6,000. So this is the advertising. Simultaneously, when outstanding advertising expenses is given, that you have to also take in the liability side of the balance sheet. Outstanding advertisement expenses. That amount is your 1,500. And another outstanding expenses which is given in the travelers credit side that you have to put, because it is given within the travelers, so we have to take it only once. Outstanding wages, one amount is given in the credit side. Outstanding wages is a liability, that means current liability. Outstanding wages amount is we have to check it. Amount is 700. Outstanding wages amount is 700. 700. Yes, 700. So then the next item is royalties. Royalty is a trading account item. It is a direct expenses. So we have to take it royalty in trading account. So please come to the trading account and put here to royalty. Royalties. And the amount is royalty amount is your 3000. Royalty is amount is 3000. Here, our book balance book grand total of trading account and our grand total is not matching because only one thing we have taken one uh, another way of treatment, that is your goods taken by Daya for personal use. In the book that is deducted in the taken into the credit side, but I have already deducted from the purchase. So there is no impact. This is the same treatment, so that our gross profit is matching. Our gross profit amount is 1,09,500, and your book also showing your gross profit is 1,09,500. So answer is perfect. So this I have shown these things only due to you have to know that the item which is deducted in the debit side is the result is that, and that result is also equivalent to the item which is deducted in debit side, that may be simply taken in the credit side. The answer will be same, and the treatment is also correct. That you understand. That's why I have taken this treatment here for your better understanding. And all the item we have taken, and just we have to take the credit side of general reserve. General reserve is the item which you have to take in the liability side of the balance sheet. General reserve. And general reserve amount is given in the credit side, that is 14,500. And the next item is capital. Capital of Daya is taken, and now we have to only take the capital amount of our Kasma, KAS Kasma, and amount is 1,20,000. 1,20,000 is the capital amount, and we have to add the net profit, which is not calculated. After a calculation of net profit, then we will add that amount. So please wait till up to that for better understanding. And your every item is taken, net profit, outstanding expenses, then proceed on. Then the next item is creditor. Creditor that you have to take. Creditor, and creditor is a liability that you have to take in the credit side, liability side of the balance sheet. Creditor is a liability that you have to take in the liability side of the balance sheet. Creditor amount is 98,000. Very simple thing, 98,000. Then reserve for doubtful debt, it is already treated. Sales is already treated. Outstanding wages is already treated. Purchase it is already treated. Discount is also already treated. So within the trial balance, all the item we have taken. Now count to check all the adjustment. Closing stock is taken twice in the balance sheet asset side and also taken in the credit side. Then depreciation of machinery and building, it is already taken in the balance sheet in asset side, then also taken here in the debit side of PL account. So adjustment 2 is also clear. Bills receivable included in dishonored of bill, that we have also taken bills receivable, that is deducted from the bills receivable here and also added with the sundry debtor, and it is also treated. Number 3 is also clear. Then the goods worth 1,000 taken by Daya for personal use, that is deducted from the purchase account in the trading account. Then it is also taken in the less as a capital of Daya, because it is a drawing, because the goods withdrawn for personal use, it is deducted from the capital in the liability side of the balance sheet. So adjustment number 4 is also clear. Then write off bad debt 1,800 is deducted from the asset side from the debtor, and the same amount we have taken into the debit side of PL account. And the reserve for doubtful debt, which is charged at the rate of 5% here, that is also taken in the asset side of the balance sheet by deducting from sundry debtor and also charged to PL account debit side as expenditure. Then the goods sold 6,000 was sold but not recorded in the books of account. So that is 6,000 we have already taken as a goods here in sales added with the debtor and also added with the sales record. So dual entry is also made. So this is all about our things. Then now we have to all the item we have taken and checkout is done. So now we have to check the net profit. What is the amount of net profit that we have to find out? There's the formula in Excel that like this you have to put. So to net profit, to net profit, FIT to net profit carry down, you have to like this carry down. And the formula you have to put like this equal to the total credit side amount minus total credit side amount minus total credit side amount minus sum of all debit side. Yes, you can sum of all debit side item that you have to include all the debit side item. And also have to give the transfer entry. Also have to give the transfer entry by gross profit. That's why our answer is not matching. When you put transfer the gross profit, then it will match gross profit brought down, which is carry forward from the trading account or gross profit, and you have to just link like this equal to and choose your gross profit amount. Now I have transferred the gross profit and the total figure is 1,13,300 and debit side grand total is also that the extra cell which you have to delete. Now let us check in the book balance whether it is perfect or yes. Our grand total value of PL account C 1,13,300. Our also 1,13,300, and net profit is 88,621. Our value is also matched 800. This is your net profit amount which is matched. So it is a very simple concept. Just you have to focus in the proper way. You get the answer, and there will be not a single doubt if you practicing it in a very slowly. I have discussed. So I think it will be clear to you. And the net profit which is realized 88,621 that will share equally among the Daya and Tasma. So you have to take the 50% of net profit which is realized, that is divided by 2. That means 44,310 rupees 50 paisa added with that 44,310 that is added with this, and another 50% you have to take here. This divided by 2, another 50% added with the Tasma, and result is find out the result by adding in the outer column. So amount of Daya is 1,59,000 plus our profit figure is this, and the decimal figure if you check it and make the adjustment. So 44,311, 44,311 if I put here and taken as this 44,310, 44,310, then our target is matched. So it is fully equivalent. One decimal point is there, so we have adjusted this as a round up figure, and the total capital of there is 2,03,311 and 1,64,310 is Tasma's capital. Then our general reserve is given, that is 14,500 we have taken, and the outstanding creditor is 98,000 and outstanding advertisement expenses 1,500 and outstanding expenses wages is 700, and the total amount is our 4,82,321. It is also matched with your book balance sheet balance. So, and also check the asset side total balance is also same. So it is all about the